Well, if there is any stock you can discuss for the economy as a whole, it has to be Larsen Toubro. Well, it's on our radar because of the Q2 numbers, a great set of numbers actually. On all parameters, it saw an encouraging order book. That was the biggest thing, the order inflow, and right now has the highest ever order book that it ever had, 3.7 lakh crore. Good to hear that number. Maintains a guidance of 12 to 15% in the order book booking. The stock has drawn all-round praise, actually. There have been some brokerages that have even increased their target price. I think Morgan Stanley is the one that has raised the EPS target for FY 23-24 by about 1 to 8%. So an all-round buy from many brokerages. R. Shankar Raman, the whole-time director and CFO at L&T, joins us now. Mr. Shankar Raman, thank you very much for joining us. Well, I'll start actually with the Hyderabad Metro and the road assets, because that's got the investor community very excited. Can you give us any timeline for the Hyderabad Metro? After all, the passenger traffic is improving.
Actually, the timeline is ticking. We have, in the last 3 months, managed to obtain the government's permission for interest-free long-term loan of 3,000 crores. This has been discussed for almost close to a year with the government now. And this quarter saw us actually get that government order, which is a very significant development for the project, because this 3,000 crores will go to reduce the debt of the project. Just to step back, I think the project is actually a good project. The capital structure was not in line with the ridership that we have been experiencing. And obviously, the capital structure never took into account there's going to be a COVID break.
Yeah.
So what we are now attempting to do is to ensure that we get the capital structure right for the ridership that we are currently experiencing.
Okay.
13,000 crores of debt when 4.5 lakh people are traveling on the train every day is a little unsustainable. We need to get it down to somewhere around 8,000 odd crores of debt. And this 3,000 crores will help us get there. We've also got the government permission in the last quarter to be able to monetize some of the land parcels that are associated with the Hyderabad Metro project.
Yeah.
This again is a big win according to us from a strategic point of view,
Yeah.
because this will help us again reduce the debt.
I'm sorry to be interrupting, because I'm trying to pack in more in this interview. This much I got from your conference call, that you are planning to sell land parcels, and of course you've got the 3,000 crore from the government as well. But that will leave us still 2,000 crores more to get to your 8,000 crore target. By when does that happen? Will these land parcels be sold in the current financial year? You have any other plans to get to 8,000 in this FY?
A portion of the land parcel will be sold in the current year, but this is going to take at least 12 to 18 months for completing the restructuring that we are attempting to do. So you can say that right from as we speak now, till the end of the year, there will be some portions of action, and then it will continue on to the next year.
You will be factoring in a rise in ridership as well, isn't it?
Yeah, I think that has been encouraging. Almost 20,000 people every month incrementally are beginning to ride. We hope that the IT crowd returns back to office to work, because that's going to be a major needle mover insofar as the ridership is concerned. I think this asset, and since it is transformative mode of travel, Hyderabad will have to get used to using the metro. It's getting there. I think it will take, in another 2 years' time, we should see 6 to 7 lakhs people riding every day on this.
Okay, now let me come to the road assets, Mr. Shankar Raman. What is the amount you are looking at?
See, the assets are in form of the stake in IDPL, because the IDPL is a subsidiary that is actually holding all these assets. Every asset is unique, so it has its own discrete cash flow. Being a very price-sensitive information, before the document is inked, I am not authorized to announce the value. But suffice to say that we are getting a fair value for the assets that we are exiting. We are into the documentation discussion phase, so I expect by the time this calendar year is out, we would have inked the document. Like anything else, I think we need a hell of a lot of approvals from various authorities. So that is going to take 3 to 4 months for getting the various NOCs from all the concerned stakeholders. So the consummation of the deal, we are targeting to do it by March 23. Maybe it will slip a month beyond that, depending on how rapidly the approvals are obtained. But step one, milestone one, would be to ink the document by end of this year.
Okay. So the ROE impact will be already definitely there in FY24.
Oh, most certainly, most certainly.
Okay. Oh, that's good to hear because after all, the pricing is already adjusted in the stock market to the FY24 ROE. And that's why I was trying to get a number. I guess we will get a number closer to March, right?
Yes,
Okay.
you will.
Okay. Now we come to the margin. I mean, that was the only sore point. You had all-round praise for every aspect, order booking, execution, etc. But margin, yes, fell short by about a percentage point. There are encouraging signs, as you pointed out in the conference call, that commodity prices are falling. Perhaps even execution speed will improve. Do you think you'll only get to flat, or is there a likelihood of an upside surprise?
See, at the beginning of the year, we told ourselves that we need to have 30 basis points improvement over the reported margin of the previous year, which was 9.2%. So we were shooting at 9.5%. We didn't anticipate the supply chain to stay broken and the war to continue the way it has been so far. So to that extent, I think there has been some headwinds in terms of the supply chain getting back to order. But having said that, most of the costs that we are booking as we progress onto the jobs now are procurement contracted during the last 12 to 18 months, especially the long lead items. So given that we are consuming the high cost material that we have procured during the inflationary phase, the benefit of procurement at current prices and hopefully going beyond the current levels if the prices continue to soften some more, the benefit of those would actually play out in the margins in FY24.
Okay.
So what you will see in FY23 is possibly the growth that we anticipated over the previous year may prove to be a challenge.
Okay.
We have not given up yet. We're doing everything possible within our means to make sure that we're able to get all aspects of execution done well so that we can do some amount of recoupment. But the fact is, I think the war and the supply chain disruptions have actually put a spoke in the wheel.
Oh, yes, it's put a spoke in the wheel in every aspect of the macro and the micro, isn't it? Let me come now to the order book itself, the best part of all that you all said yesterday. Looks like your sources of orders are central government, central PSUs, state government, private sector, and international orders. Now, which of these five are showing more traction in the second half? We already know that central government and PSUs did better, the Gulf countries did better. But if you have to guide us for the second half, which group is likely to give you best?
Actually, this configuration is the configuration that we anyway are targeting. So all our order inflow has to come from this configuration.
Yeah.
Just statistically speaking, out of the 21 odd lakh crore that has been set aside between the state center and the PSUs, roughly about 7 lakh crore is the center's share. 30% of that has been consumed in H1. That still leaves 70% to go.
Okay.
The states have been a bit of a laggard. The states have consumed about 20% of what their budgetary plan was. So always the aspect that we need to watch out is how far states are equipped to carry through their plan. And to the extent of shortfall that could happen, because this we've been seeing from time to time, that states do end up shorter than what they plan at the beginning of the year. The robust order seen in the Middle East is actually proving to be a fairly good compensating factor.
Okay.
The energy crisis that the world is facing has had some upsides in terms of the investment momentum and interest in the Middle East. Not only is Middle East investing in energy assets, it is also investing in assets which are energy intensive in its application. So we find that fertilizers, refinery expansion, as well as the minerals and metals sector in the Middle East doing well. Okay. Middle East wants to also broad base its economy and attract more people for so many other things other than purchasing oil or gas. So the infrastructure build out that is happening in Middle East, Saudi Arabia in particular, because that country is beginning to now gather a lot of pace in terms of all-round investment. We see opportunities in renewable energy there. We see opportunities in power transmission there. We see opportunities in water there. So all of and some of these countries are also building new cities.
Okay.
So all of this gives us a good counterbalance to possible shortfall that could happen in the state spend in the domestic markets.
So I'm not surprised, sir. All our money is going towards the Middle East. Every, oil, crude importing country. So, they are bound to be, at least there is a positive for you in terms of the order book. I want to know about private capex cycle in India.
I think let me broad-base private capital investments. Very interestingly, in this half year, actually, the share of private sector capex is 37%, and I have not seen this in the past 8-9 quarters.
Oh.
The percentage used to be around 19-20%, and now that's moved to 37%. Largely on the back of private sector orders that we have received in solar space in the Middle East, as well as in the domestic market, a large expansion in the steel sector.
May I interrupt,
these two have been,
May I interrupt 1 minute? I wanted to know about Indian private sector.
I know. The steel that I'm talking about
Yes,
is Indian private
Indian.
sector.
Yeah.
And we find that investments in data center is gathering pace. The long format IKEA is investing more in opening more centers, and we have won some orders so far, and that seems to be a prospect.
Okay.
Automobile industry, paint industry,
Okay.
cement industry, all of them are in discussions for brownfield expansion. I have not seen so much of greenfield expansion other than the recent announcements that are made on some areas like green energy and aerospace. Much of these expansions that we are currently discussing on our brownfield expansion, existing customers at some point in time. So we are confident that these incremental capex will ultimately at the end of the year have a bearing on the private capex coming out much better than what they were, say, 1 year before.
So how confidently can I, as a macro student, say that the capex cycle has started?
I think it's just a question of our own mindset when we look at these, because the balance sheets of private sector have got repaired big time. I think many of them are still the memories of a large capacity not supported by market is still fresh in many minds. So boards are not going to be falling over each other to make sure that the approvals are in place, but there is an opportunity in all this situation. India seems to be better placed than most of the global economies. So that being the case, and the push that the government is giving for increasing domestic manufacturing augurs well for us to stay positive.
Okay, that is still staying positive. I wish you would talk about positive in the past tense. Augurs well is what I have heard for quite some time now. In any case, out of time, Mr. Shankar Raman, it's a pleasure speaking with you. Many congratulations, and one number. Can you guess your ROE next year? Range?
Yeah, we are targeting to be at least 1% higher than what we were last year.
Okay.
And I think incrementally every year till 26, you will see this 1 to 1.5% increase.
Oh, that's a great number by way of guidance. Thank you very much indeed for joining us. We have to wrap up on Bazaar on that high note. Trading ideas lined up for you on Chartbusters.